Guys, we gotta talk about the big white elephant in the room, which is RWA, real world assets. The reason why we're so excited for RWAs is that the policies in the US are drastically changing in favor of tokenization, in favor of crypto leading the way, and US doesn't want to kind of get trapped in that nightmare that was their policies. So with tokenized stocks, that means stocks, tokens, real world assets can be accessible by anyone, anywhere in the world. And that's actually I think that's a really powerful proposition because you directly cut out a lot of middlemen. You make the traditional $1 trillion stock market that's moving directly on chain.
Yeah.
So today we're going to talk about one new WhiteRock exchange, but literally these guys are called WhiteRock. It's a play on the famous investment group BlackRock. But WhiteRock, they're doing tokenized assets. That's like stocks, bonds, properties, all on crypto, directly on chain on Ethereum. So what's actually really interesting is that on chain they actually have a weekly trading volume of over $100 million right now already.
My God.
Right? There's demand for this. And then of course, that's going to add as they start adding more and more phases. So right now they're currently in the tokenized asset stage, which is White and USDX, but that's actually going to grow as the platform grows. So phase 2, 3, and 4. So right now, this is something that I feel like Ondo Finance has a $15 billion market cap. These guys sitting 150 million, so not the billions yet, in the millions. Relatively still undiscovered, but strong team, which is why our research team found this, and which is why we're talking about them in this video today. And of course, everything covered here is our personal opinion, not financial advice, not your financial advisor. Let's get started. Let's go from the start of what makes WhiteRock interesting. Is that they're combining the securities, traditional securities offered by NYSE, NASDAQ, and LSE on the blockchain. What's more interesting on top of that is that they're not using their own blockchain, they're actually using Ethereum, so that once everything is set up, it actually gives them a lot of power. So it gives a lot of people that are on Ethereum direct exposure to these assets. And if that's really kicking off, I can actually imagine that being plugged into DeFi, which, wow.
Yeah. In fact, WhiteRock is the first project to deploy tokenized stocks onto Ethereum. So they definitely have the first mover advantage there.
And their team is experienced, so they have ex-Goldman, ex-ING, and they're kind of partners with StoneX and BlackRock to ensure asset security. So they're kind of like in the finance sector. So they got people that have worked in finance, so they're the suit guys. And I love to say this, fortunately, unfortunately, suit guys are needed to bridge DeFi with traditional finance.
Yes.
Beard guys are needed just for DeFi. Okay? They're the beard guys, but the suit guys are needed.
They needed to say it is the future.
It is the future. So they're taking on a bold claim here, which is bringing just tokenization across everything. So not just stocks, real estate, bonds onto the blockchain, and that's a very powerful statement. And we looked at this in the past as well. All right, in the past, we looked at how we can do something like this, which is a USDT directly to Apple or any stock or whatnot. The problem is it's not the tech that was difficult. It was actually getting around the legal hurdles, which is kind of the core issue here. So they're directly tackling that, and they're trying to be the frontiers of fat. So one kind of slight difference here between this and everything else that's traditional is that they don't want to be a securities broker. They don't want to be defined as a securities broker. They just want to be a platform for price exposure and economic rights for tokens, but not the rights to the underlying asset. So I found that quite interesting. So this is kind of like how they're getting around this securities broker issue that a lot of companies have other face. They're just trying to say, okay, they basically broke apart the stock. They're saying, yeah, you don't have the underlying asset, but you get the price exposure of the underlying assets. I think that's kind of interesting. So let's take a quick look at what they're offering right now as well, which is quite interesting. So their ultimate goal is obviously to tokenize every stock, properties, bonds, etc. But right now, starting at this current phase, they're starting out with something called USDX. So obviously we're familiar with something like USDT.
Yep.
But the problem with USDT is that the money from the treasury don't go to us.
Yeah, it goes to directly Tether.
Yeah. So we know that the Tether guys, they take US dollars and then they put it to yield-bearing assets, and then just pocket that. Yeah, straight to our pocket. Yeah, you know, go figure.
Yeah.
Right?
$20 billion a year too.
Yeah, $20 billion, 5% of that.
Insane.
That's a good business model right
very,
there.
very good, yeah.
Very, very good. That's almost $1 billion a year.
Yeah.
For just, you know, doing
nothing.
doing nothing. So USDX is a 1-to-1 peg with the USD dollar. But what they are doing is that they're giving 5% back to token holders. So they're trying to create this alternative to Tether that's giving back. Now, what they are interesting, like in terms of mechanisms on what they're doing with this in the background, is if you look at their tokenization, is that the anything from Coinbase, the USD goes to the BlackRock bank account, which is then managed by Akula. So this is a investment fund. And Akula deploys it into something called DeepSea. That's DeepSea is a fund for BlackRock customers, and they can use that to kind of manage this as a fund and then generate income on that, and they can pass that on back to the holder. So it's a 1-to-1 peg, but yield-bearing 1-to-1 peg here.
Essentially providing liquidity so that they're incentivized.
And one of the advantages that WhiteRock talks about is that they're actually gearing up, and I think that's quite frankly when we see the white paper stuff, they're gearing up towards institutional customers a lot, and they're allowing direct access.
Yeah.
So institutional customers, they don't have to sell their stock. Let's say, for example, a big fund, they hold a lot of Apple or Tesla or whatever tech stock they have. They can just directly put that on chain with what WhiteRock is providing instead of like selling that and rebuying again. So, you know, usually that incurs fees, right?
Yeah.
You sell that 1.5% fee, you buy it again, 1.5% fee. So it's like kind of like a fee-less direct access to putting securities on the blockchain.
Yeah, and we're seeing this in real time now. You can actually bridge them directly to on-chain, right? So if I were a big stock investor, I would feel like a big psychological loss if I had to sell all this.
It's
get back again on.
It's onboarding issues, right? They solve a lot of these onboarding issues. They know what the pain points are for institutional customers, and they're solving directly that. I do want to say one thing here is that they advertise 5% risk-free. But as you know, and you guys are on Boxmining, you guys all know this, there's no such thing as risk-free, right? There's absolutely no such thing. If you get rewards, there are risks. So obviously, there's risks on putting funds on a blockchain. That's one of the risks there.
Yep.
The second risk is that the funds are going to a separate fund. And these trusts usually are set up very well to protect users' money, but they always involve a little bit of risk. So like I would say, hey, look, you have exposure to funds, trust assets, and exposure to on-chain risk. So that's one thing you should consider there. Okay, lastly, I think what we want to talk about is what makes this actually exciting, right? So right now they're in phase 1. They're kind of like a baby stage. They're walking and they're testing out their systems, but really the end goal is on-chain tokenized stocks. And I think this is what I'm excited about, right? Why? It's because if stocks are on-chain, 24-hour trading, so we don't actually have all that, markets are closed, 9 to 5 stuff. We know 24 hours works for crypto. Why shouldn't it work for everything else, right? On-chain, direct access, you don't have to call your broker up, have that relation built up. You don't have to have the middleman. More importantly, of course, no geographical restrictions. So I think this is actually really important because stock trading, more people want to have access to it, but then there are geographical restrictions. Say, for example, if I want to buy something that's listed in the UK, if I want to go from my current bank, holy shit, the amount of paperwork I have to do, the amount of stuff I have to do to sign on, it's just the pain of it itself prevents me from getting access, but I might actually want to have access.
Yeah.
And so this is where there shouldn't be these barriers, but there are barriers put in place by middlemen who want to have to take more money, right? The compliance officers, they have to pay them, they have to pay everything. I'm not saying that there should be no compliance. I think that's quite clear that stocks need to have some sort of compliance, but it can be a lot simpler.
Yeah. And another thing I like for retail traders in particular is the fractional ownership, right? So when you're buying a very high price stock, you need to buy one share. So, with crypto, you don't need to own one Bitcoin. You can own 0.01 Bitcoin, right?
Oh, yeah, that's true.
With stocks.
So Warren Buffett's going to cry in his grave.
Everything he stands for is like gone.
Yeah, make it expensive. Nah, let's make it cheap.
Yeah.
Okay, let's make it cheap. That's fractionalized ownership. Even if you have 20 cents, you can buy a fraction of a share.
That'd be cool, no?
Exactly. I'm a shareholder.
Hey.
Hey, I'm like a hat.
How many shares you got? Less than one.
All right, guys. So that's what we found interesting about WhiteRock. I mean, it's a funny name. It's a funny name. They're definitely playing on BlackRock's fame here. But in terms of what they're doing, they've already launched phase 1 of the project, and I'm really excited for more phases to come. So we'll see how it goes on. But RWA space, definitely something to keep an eye on, especially with Trump's inauguration. Basically, the highway that was covered with red tape is now like, go ahead.
Yeah, red carpet now.
Red carpet. Road ahead. All right, guys. Thank you guys so much for tuning in today. We'll see you in the next video. Shout out.